All right, everyone. Well, welcome to another DigiShares webinar. We are always excited. I'm pleased to be invited here to help host the webinar today. DigiShares has been doing these for a while now, always providing great value to everyone listening in, from great speakers, people that are true industry leaders in their own spaces and whatnot. My name is Jason Barraza. I'm COO here at Security Token Market. Security Token Market, or STM.co, is essentially the price discovery tool for the tokenized real-world assets industry. So we track over 500 trading tokens and counting, along with across different asset classes, asset-backed securities, real estate, debt, and funds, and all sorts of stuff. So if you ever are curious to see what tokenized assets are available, go ahead and check them out on stm.co. But with that, I am excited to again, like I said, be able to host a variety of people. So we'll be starting off with some opening remarks and some updates from DigiShares themselves, their CEO, Claus Skanning. Claus, how are you?
I'm very good. Thank you very much. Thanks for taking the hosting role again, Jason, after your great conference last week. It's a pleasure to have you here. It's a pleasure also for us to organize another webinar. I think it's close to 50 that we've done over the years, so it's getting to be quite a lot of them. We had one last month focused on alternative assets that was quite well visited. And this one is focused on emerging markets. We see actually a lot of activity in what we call emerging markets. We get, I would say, close to more leads, more interesting project ideas from emerging markets than from established markets, if it makes sense to call it that. And I think that the reason is, in many cases, that there is more a higher need for this kind of infrastructure in those markets than there is in the so-called more well-developed markets. So we can maybe make more of a difference and provide more value with tokenization. And I think I'm looking forward to hear more about that today in these 6 use cases that we will see today and that we are proud to present. We're just starting to plan the next half year of webinars, and if anyone has any ideas for what we should focus on, let us know. We are, of course, DigiShares is a provider of white label technology for tokenization. We're getting close to having 200 clients signed up for the platform globally in more than 40 countries. So we cover quite well globally, and of course keep expanding the white label solution to handle many different types of configurations and use cases, and try to develop in a direction also that is very sort of highly interoperable and compatible with the rest of the ecosystem. So we get a system that is interconnects better than it does today. Then, of course, we are also working on launching an exchange called Real Estate.Exchange. The goal is first to launch it in Q3 in the US. Retail investors will be able to trade. It will initially be possible just to list US entities together with offering documents for Reg D and Reg S, for instance, or Reg CF, Reg A. But we expect longer term, maybe not long after the launch, to be able to list international companies, non-US companies as well. And then the goal is after that, and I'm actually in Dubai now to investigate the possibilities and push it forward, to license also the exchange in the UAE. We have a good dialogue with both of the regulators here, ADDM and VARA, who are sort of concerned with this type of license. And together I'm presenting at an event organized by the Dubai Land Department. The Land Department here is very eager to promote tokenization and sort of enable companies to more easily tokenize. And this is, to my knowledge, the first time in any country globally, possibly, where the Land Department wants tokenization and is actively promoting it and trying to further it. So I think that's quite a unique opportunity for the tokenization industry. Other than that, I can mention that we are at Consensus in 2 weeks, and happy to meet with anyone there. I think Consensus is a great event. It is one of the longest running events in the crypto and blockchain industry, and I think we see many of the big companies and the decision makers there. There's not much focus on tokenization at Consensus this year, but hopefully we can sort of increase that through the masterclasses that we will host as a side event. Also, again, I'm in Dubai in 4 weeks at the World Token Summit to further promote tokenization activities in the UAE. The US is probably still the biggest market in tokenization, but I think the UAE could potentially take over in the next year or so, because there's so much happening here in the space. So with that said, I will give the word back to Jason, and looking forward to hearing the presentations. Thank you very much.
Fantastic. Thank you, Claus. Appreciate all the updates, and excited to see everything that you guys are working on. Real estate.exchange, of course, is something that has been on our eyesights for a while now, and we're excited for it to come live and hopefully track some tokens on stm.co. So lots of work to be done together. But with that, we'll be transitioning into the actual webinar now, going into some of the presentations. We're going to start with Nick James, CEO of Bankto. Nick is a visionary entrepreneur with a key focus on disruptive tech applications, behavioral economics, and blockchain-based fintech applications. So with a keen interest in innovation, he founded Bankto, an organization revolutionizing the payment landscape through cryptocurrency services. So without further ado, Nick, you're up.
Thank you, Jason, for a great introduction. So hello, everyone. Welcome. I'm Nick James. I'm the founder and CEO of the Bankto Group. My background, of course, I'm originally from Australia, and we operate a payment solution technology company and licensed crypto exchange out of Europe. And to give you a bit of a backstory, our story really sort of began from having a business background, wanting to solve solutions in the industry with the introduction of blockchain and other technologies that we've sort of seen coming to the market. And primarily over the last 10 years, we've seen a tremendous growth during this time. And that led our company to develop these technologies to really help businesses navigate the traditional banking framework, which I'm sure we've all had experience with. But more so, the new introduction following blockchain is really the main focus and where this industry is really headed, and that is into the tokenization space. And with that, we see there's a huge uptake. Personally, we've seen a lot of uptake in digital payments, more so with the advent of COVID-19 and pandemics, which we've all experienced. But as a result of that, we see businesses globally moving towards not only digital payments, but into the tokenization space. And in fact, it's so strong as an emerging market that we're seeing a lot of new opportunities created into this space. As an example, the global tokenization market size was valued at around 2.8 billion in 2023, which was only 12 months ago. And we expect that to grow to about 3.3 billion this year, and continuing approximately about 20% per year to see that around 13 billion in 2022 or 2032. So it's really going to be a rapid growth. We also expect the tokenization, or within the next 10 years, approximately about 50% of all tokenized assets or real world assets be tokenized on the blockchain. So it's a very, very exciting space. Other than that, known as real world assets, we believe the blockchain technology will continue to disrupt the traditional financial markets as we know it. Tokenization also stands as the single greatest opportunity, we believe, that's going to replace what was a traditional sort of more of an archaic system that we have in place today. And we also believe the real world assets are both more tangible and intangible on chain. However, the impact of tokenization has far more reach just on financial markets than things technically just being on chain, which leads us into the opportunity that we see in the market with the DeFi technologies, giving people the opportunity to be able to not only invest in what traditionally was an illiquid asset, but become a liquid asset, meaning micro investors, or those people that may not have had the opportunity, can now invest in physical assets such as property. And basically, the shift that we see is coming over the next couple of years with the introduction of DeFi, will allow an individual to invest in property and DeFi or borrow against that token. Now, traditionally in the past, that might have taken 50 days on average to get an application or access that finance. With DeFi, it's down to 15 minutes. So we're very, very pleased to announce the launch of our tokenization platform, which is metashares.io. And as the market continues to develop, we believe the UAE is going to be a very, very interesting market, as Claus has rightfully pointed out. But also the growth within the UAE is outstanding at the moment and very forward thinking in terms of the opportunity, the tokenization and the future of investments. With that said, we believe it represents many other opportunities, including investing, buying and borrowing on chain. And one of the key points really between tokenization and other blockchain innovations is that tokenization also provides a bilateral benefit to both the individuals who interact with tokenized real-world assets and also the institutions that are tokenizing real-world assets. Now, this may come into form of funds. It may come into form of precious metals, commodities, even intellectual properties. So you can start to see really the emerging markets and the benefits and the opportunities that this is going to have an impact globally around the globe. So we're very excited to be part of that. We're thrilled to be working with DigiShares and some of this new technology, our DeFi partners around the world. And we really think it's going to transform the landscape as we know it. And that includes the finance sector, the real estate sector, mining, precious metals, and of course, commodities. So that being said, I think the tokenization is really going to offer a massive boost in efficiency within today's financial systems, which is most of the time we find that it's sort of weighed down with the physical documents being transferred and long settlement periods. So, and often as a result, as most of us know, this results in a lot of bureaucracy. But with tokenization, the settlement is immediate and it's final. So it nearly eliminates the information gap between the transaction and settlement times, and also has a significant impact, like being or offering a liquid mortgage, so to speak, through DeFi. And that's whereas tokenization can reduce mortgage-backed DeFi technology products. And a holder can also not only borrow against his MetaShare property tokens, but also reduce the loan process. And this will make the industry very liquid. We think that's going to be a global opportunity for many companies, including developers, property investors alike. And we see that this will, within the next 10 years, really expand into an opportunity where not only property will be tokenized, but as I said before, businesses, funds, and commodities. So that's the industry. From our side, it's just getting started. We believe the opportunity is immense. If you can, to learn more about tokenization and the opportunities, I suggest you research it. This is going to be a very fast-moving industry, and we'll also be seeing some additional examples come onto the market and technologies which will present various opportunities. As we see it, it'll be a new era of investments. So I appreciate your time. I hope that gives you a bit of an insight into what's coming in the industry. And with that, I'll hand you back to Jason.
Shit. Hi, sorry, I was on mute there, but thank you, Nick, for that. So I do want to dive a little deeper into kind of a few points that you just touched on, but reminder to anyone in the audience, if you do have questions, there's a Q&A function in Zoom. So feel free to submit your questions there and we'll address them as they come along. But Nick, diving a little deeper, so you touched on crypto payments through Bankto, but then you also talked about tokenization through MetaShares. I noticed a common theme from both of them. Bankto has the ATMs, for crypto, and then I saw kiosks on the MetaShares website. So I think the ATMs are kind of self-explanatory, but for the kiosks, can you tell us a little bit more about, what that enables in terms of investing in opportunities and so forth?
Yeah, absolutely. So in terms of the if I step back a moment, primarily we're sort of a technology company based in blockchain and cryptocurrency payments, and the natural progression to that is into the tokenization space. So as a payment technology, we are planning to roll out tokenization kiosks, where this is going to bring the opportunity to the public to be able to access this in a very accessible way at a point of sale experience to invest, buy, or borrow against property tokens or investment tokens anywhere in the world on chain. Now, this is going to open up markets and emerging markets. Typically, those countries that may not have had the opportunity will be restricted to access to invest in foreign markets. Now, as an example, this will give anyone in the world the access or the ability to invest in real estate it may be Europe, Australia, or abroad, and have them the ability to interact through a digital kiosk via on-chain cryptocurrency payments. So we believe that's going to be a game changer. We believe it's going to give accessibility to a wider audience. For as little as $100 per token, you can become a property investor.
So if I wanted to invest into a property, I go up to a kiosk and that'll handle all my KYC AML as well as the investment itself. Where are you placing these kiosks? Are there, strategic areas that are placing them, or are they closer to maybe the property that I would be investing into? How could we find those?
Sure, great question. So if you go to metashares.io, there is a link there to be able to locate the closest unit. But that being said, we are rolling out these kiosks globally is the plan. It is a very, very new technology. It'll be first to market, and these will primarily be available in jurisdictions such as Europe, UK, right throughout the UAE, Australia, Canada, Singapore, Hong Kong. And of course, later on, phase 2, we'll look at rolling those out into the US.
Very cool, very cool. All right, another question for you, Nick, while we still have some time here. Do you see, going back to the crypto payments on the Bankto side, do you see some markets, more open to crypto payments and making those happen, whether for a merchant or for personal use versus other markets?
Yeah, so that's a good question. We do see a large uptake. So as a use case, let's start with Australia. So Australia itself has been very proactive in the crypto space. We're seeing a dramatic increase in acceptance right throughout Australia as a continent or as a country. Those other markets we're seeing right throughout Europe, Spain, Germany, right through to the UK actually are really starting to embrace crypto payments, in a sense that we're seeing a 30% uptake each year on companies wanting to go into the B2B processing space. One of the reasons for that is purely because it's speed to market, reduced costs and accessibility. And it also gives the business owner the ability to accept payments or open their market to an additional 500 million users on the planet. I think that's number one. But most importantly, what the technology does, it'll allow a business to accept cryptocurrency without the risk or fluctuation. And on the back end, they can receive euros, pounds, or even dollars, depending on that. So this is a game changer that wasn't available a couple of years ago. And what it enables is businesses to enter this space, invest on chain, and in doing so, we're seeing a dramatic uptake globally. While businesses are becoming a lot more comfortable, we're seeing higher usages of wallets, higher usages of uptakes, and just not cryptocurrency, but tokenization as a whole. And one point I may add to that is that we are dealing with two different regulations here. And as an example, the crypto is quite heavily regulated in the US, but tokenization is embraced. So if you look at that and step back, you can see the opportunity in the market cap and the opportunity on a global level what that means in terms of property accessibility and investments.
Makes sense to me. And no, you're right. I mean, tokenization honestly is one of the bigger opportunities here, right? Because all the assets that one would tokenize, their value already exists, right? It's just a matter of putting it on chain. I could definitely see a world, or we've seen examples where people invest into tokenized assets using cryptocurrency or stable coins. But we've also lately seen an increase in liquidity funds, money market funds that are being tokenized. I'm sure we've all heard of the BlackRock Biddle Fund, a little bit more institutional. But on the retail side, we've also seen Wisdom Tree's money market fund, as well as the Benji token from Franklin Templeton, also retail friendly. And they just enabled peer-to-peer transfers. So I wanted to ask Nick, how does that impact your business model or what you're looking at? Or is there something where it's a collaborative effort? How does that impact you guys?
Yeah, so we are seeing a great, as traditionally as a payment process on a B2B level, we are seeing dramatic increase in volumes. We're seeing a lot of those other countries open up. But in terms of trade and commerce, we are seeing from a B2B perspective, an investment perspective, we're seeing a greater uptake year on year. And in fact, with everything that's happening in the world, which I'm sure we're all aware, we are seeing a lot of people, a massive shift into this space, which is very positive for the crypto space. It's not necessarily we're talking about investments in cryptocurrency, but the advance of the usage of stable coins, as an example, has dramatically increased, and that just sort of indicates to us that there's a lot of people around the planet that are moving out of those traditional systems into stable coins, where it's safe and secure. They're then able to access additional markets, liquidity, and also investments around the planet. So I think that, as you said, also with the BlackRock investment fund, we've seen how successful that was, and I think that's going to be the first of many. So I think with the rest of this year and going into next year, I think we're going to see a dramatic shift in the uptake of tokenization.
Yeah, no, that makes sense.
Yeah.
Friendly reminder to the audience, again, questions are open, but I do want to open it up to the other panelists as well. If you have any other questions for Nick, feel free to jump in. Not all at once.
Not all at
once. Well, other than that, Nick, I also saw, so you guys have the kiosks, which I think is really cool, especially for, physical interaction into your investment, but you're still touching Web3. But I also saw that you guys have an app on the App Store. So can you tell us a little bit more about, what that app enables your users to do from a mobile perspective?
Yeah, that's a really good point, because the Bankto group as a whole, what we've created is the basis of that is the B2B instant payment technology. And we implemented that into the tokenization kiosks, which will give access to the general population. But one of the key things is really everyone in the space is creating a digital ecosystem, so to speak. Traditionally, if we go back a couple of years ago, it was going through the exchange, jumping through hoops. We know the story with banks trying to block it. I think we've all had an experience at some level with that. So the app is an introduction as the final piece within the Bankto ecosystem. And that has full exchange capabilities. It has direct connections into MetaShares, so you can connect into a tokenization platform. You can buy, purchase, trade, you can swap, and on and off ramp. So it's actually a embedded banking app with the ability to connect into the space or the ecosystem of tokenization. And it just gives you the ability to interact or transition from easily or effortlessly, we like to say it, but from Web 2 into Web 3. And then from there, you have the whole world sort of open up to you to interact in the world of tokenization and investments.
Awesome. And we have a question here from Paolo, essentially asking, which geographical parts you're concentrated for tokenization?
Yeah, well, that's a great question. So ideally, we have some property funds and investments we're doing mainly out of Europe. Our main market is the UK, Europe, as I said, Australia, Hong Kong, Singapore, right throughout Asia. And of course, one of the most talked about markets now, well, tokenization, of course, is the US, because the regulation is so favorable. Not so favorable for crypto or exchanges, but in terms of tokenization. So it is a global platform. MetaShares itself is an issuance platform. This gives you the ability to submit or raise your own projects on the platform, whether that's being a property developer, and in no matter what country you may be. And how that would actually look is it's borderless in a sense. It's not restricted by country, but by saying that, any investment or property that may be come on chain to be tokenized would therefore be held in a local SVP, a local company, local structure. And the tokenization is a physical form of those shares. It's a physical form of a digital share, and the platform itself has global access on chain.
Thank you for that. All right, we are coming up on time. So with that, we'll be transitioning over to the next panelist, Nick. And before we let you go, though, if anyone wants to learn more about Bankto or about MetaShares and connect with you, how can they best do that?
Sure. So it's either support@Bankto, BANKTO.io, support@Bankto, or you can visit metashares.io. And there you should be able to find all the details and information you require.
Fantastic. Nick, thank you so much for your insights, your time, and sharing with the audience here. We'll be transitioning over now to tokenization to promote financial inclusion in emerging markets with Chaz Dunn. He's the head of business development at Libex. Chaz is at the heart of Libex's mission, blending Web3 technology with human-centric solutions for global financial inclusion. With a unique knack for strategic innovation, he ensures tech meets humanity in every challenge. So, Chaz, welcome onto the stage.
Awesome. Thank you so much, Jason. Really appreciate that. And yeah, thanks so much for having us today. Really cool to be here just to share a little bit about what we're doing and how we're trying to solve this issue of financial inclusion, across the African continent. So just to kind of give everybody a little bit of context in terms of, what Libex is, which we are going to be, rebranding to LBX over the next couple of weeks. But essentially what we've done is we've built our own blockchain, which is a layer 2 blockchain. And on top of that, we've built a suite of products. The first one being, LBX RWA, which is our real world asset platform and the tokenization of real world assets. We've then built an NFT marketplace. We have a cryptocurrency exchange. We also have a DeFi platform as well. Then we also have LBX Pay, which is a cryptocurrency gateway. And then within our ecosystem, we have a stable coin, SZAR, which is pegged 1-to-1 to the South African rand. And then we also have LBX coin, which is our native cryptocurrency, which we hope to launch, pretty soon. And then to kind of encapsulate everything that we've kind of built within our ecosystem, we have the LBX app, which we'll also be launching over the next couple of months. That's to give you a little bit of context about Libex/LBX and what we do. And I think for the topic of today, obviously I kind of want to zone in into real world assets and financial inclusion and the work that we're doing, right? So I don't really want to go too much into stats and things like that. And given the time that I have here, I really kind of just want to paint the picture and paint a bit of a narrative and kind of tie back into some of the work that we're currently doing in this space. So I first want to preface this idea that fractional ownership has been one of the biggest promises of blockchain technology. And I kind of want to circle back to this a little bit later, right? But our North Star essentially at LBX has been something that we are extremely passionate about. And this is idea of financial inclusion. And when we really break that down further, what do we actually need to achieve, financial inclusion? And, what we've kind of realized is that we need to kind of solve this problem of access, okay? And in emerging markets, speaking, from experience on the African continent, but, in all emerging economies and markets around the world, we always hear things like, we need access to the internet, or else how else are we going to learn? We hear things like We need access to clean water, or else how else are we supposed to prevent, widespread disease? Or we need access to, financial services, or else how else are we going to build our businesses? These are just some of the examples that we kind of always hear on a daily basis, in emerging markets all around the world. But again, speaking from experience on the African continent. So it's clear that, like, if you are a business on the African continent or in any other kind of emerging market, if you are solving a problem of access, you're essentially always going to win, because these are the direct problems that face our people on a daily basis. Okay. And I think this is where tokenization and fractional ownership really have a profound use case in emerging markets like Africa and beyond. We can now use blockchain technology to enable this idea of tokenization, to give access to fractional ownership to things like private equities and real estate and renewable energy projects and other real world assets. And the impact of this is really multi-layered, and Nick even touched on quite a lot of it. First, like, let's look at that, like, on a like what that does for local communities. So what this truly does is that it allows more people in a community to participate in the growth of that community's economy, right? So the fact of the matter is that if we enable more and more people to kind of give them the power to contribute and participate in the growth of their economy, that's what essentially makes economies grow bigger, better, stronger, and faster. This is simply just by giving more people, the access or the power to contribute towards its growth. And I think that's really what fractional ownership, does. So, like, for an example, we have a project listed on LBX RWA called the Soweto Towers, which is a real estate development based here in the township, in a township based here in South Africa. So we've essentially tokenized the development of that real estate property or that real estate development. The first of hopefully many tokenized projects in areas like that in the future. But before, opportunities of investing in real estate for locals is obviously too high of a barrier to entry for them. So them having to front tens or hundreds of thousands of South African rands in order to buy or invest and own a piece of real estate, now they have an option of investing towards the real estate development from as little as 10 rand, which is equivalent to about $50 right? What this really enables in the Soweto community is more people to contribute and participate economically, into the growth of their community without having to, break the bank, and them just being able to participate in, with whatever they can afford, and still reap the benefit of getting a return on that investment, no matter how little it is. And this may sound like, pretty small, but it's a really powerful and profound, concept. And, the second layer to that, and, taking it a step further over and above that, if we really start to look at the globalization of this, it's the fact that, these tokens for the Soweto Towers real estate development project are essentially borderless, right? So these tokens become available to anyone from around the world to participate, in the growth of the Soweto community. As long as you can connect to the blockchain network, you can buy, sell, and, you can trade those tokens. So this opens up, an international opportunity for, global liquidity to build, the Soweto community if people around the world wish to do so, right? So also when you look at it, like, internationally, tokenization really opens up, opportunities, to more people around the world. And Nick also brought this up. So whether I'm in South Africa, one day I can, invest, in real world assets in New York, in Saudi Arabia, in London, and vice versa, right? So anybody from New York, from Saudi Arabia and London can invest in real world assets here in South Africa. So looking at, other opportunities other than just, real estate, if we look at the tokenization of, private equities, just like, a project that we also have listed on LBX RWA called Plastic to Diesel, which is considered a renewable energy project. When tokenization of private equities really becomes, a popular investment choice for people around the world, you can imagine just how much, these private businesses can get access to global markets and liquidity, and that's, something that, businesses in emerging markets truly need, right now more than ever. They need a global participation in order to grow their businesses to a global scale, right? And, I can speak firsthand, someone who's obviously on the ground, there's a lot of innovative ideas that are coming from the African continent. So kind of like tying back to, this initial point that, fractional ownership really has been, one of the biggest promises of blockchain technology. And the first, proper use case of this was obviously done with Bitcoin, where you could buy $10 of a Bitcoin instead of, buying one full Bitcoin, right? And now we're kind of seeing that kind of trickling down into like, real world assets where you can buy $10 of a real estate development instead of buying the whole thing. So it's really clear, that the true vision of blockchain technology, with fractional ownership is now, empowering, individuals to participate in economic growth of their communities, of their country, and of their continent. So I'm of the belief that, blockchain technology, truly is coming alive now more than ever, only because this technology truly enables, access. And yeah, this is, how we look at achieving this dream of, financial inclusion. Blockchain technology is being used to solve, a problem of access, which is kind of what I highlighted in the beginning, right? And yeah, I think just as Nick mentioned, the global economy, is really also about to shift in a big way with tokenization and fractional ownership. It feels and seems to me that this technology is going to have a profound impact on emerging markets as well, and more specifically. Not only for local people who have now lower barriers to entry for participating in real world assets, but also opening up the participation, from the world through these tokens that are, completely borderless, as long as you can access that, blockchain network. So yeah, like, we're currently on that front line, brick by brick, kind of paving the future of this space and on the continent. And yeah, we really are proud of that. And of course, our doors always open to, people and organizations around the world in this space, see how we can collaborate and kind of build this future together. So yeah, that's all I really wanted to share today. And yeah, thank you so much for having me.
Fantastic. Thank you, Chaz. Reminder, everyone in the audience, I know we had an influx of new viewers, so the Q&A chat is open if you have any questions for Chaz or future panelists. But in the meantime, Chaz, let's dive a little deeper into some of the points that you just touched on. So, we're talking about financial inclusion. We're talking about, a variety of tools that you guys have, crypto, NFTs, tokenized real world assets. Which tools do you think are the most useful for emerging markets? If you had to pick maybe one of the three, which one do you think is the most useful for emerging markets?
No, look, I think real world assets, definitely, the tool that we're building that is probably primed for this, kind of economy more than ever, right? It really is just about like, as I mentioned, it's just that this idea that, real world assets and the tokenization and fractional ownership really just lowers the barrier to entry for so many people to participate in the growth of their economy, right? And I think that is a really profound shift that, is, yeah, like I also mentioned, is the fact that like, we need to solve problems of access in all emerging markets, right? And really what real world assets and the tokenization of fractional ownership does is really just provide people with access. And yeah, I think that's probably the most important tool that we're personally building, within our ecosystem that'll probably have a bigger economical impact on the continent.
Absolutely. And, I know you touched as well on local communities, participating in their own economy. We saw just recently here in the US, there was a municipal bond from the city of Quincy in Massachusetts that tokenized and is accessible through the Onyx Digital Assets platform from JP Morgan. Wanted to ask you your thoughts on maybe municipal bonds, their use case in Africa, and if you're seeing any activity on that side.
Yeah, no, look, the tokenization and fractional ownership is such a new kind of technology here, and I don't think we've even reached the point of like tokenizing and fractionalizing municipal bonds here in South Africa just yet, right? We're seeing a lot of like growth in the renewable energy space. There's quite a few projects this side, tokenizing solar panels and things like that. But I don't think we're quite there yet as a country and going as far as municipal bonds. Yeah.
Totally understand that. Like everyone has different use cases that are more appropriate for their space than others. So again, emerging
sure.
markets, different needs
Yeah.
and appetites.
Yeah, no, 100%. And just to kind of add to that, sorry, like we're also seeing a few projects in the tokenization of, cattle and things like that, especially obviously given the African economy, and just allowing people to kind of participate in the growth of, that kind of industry being, it being a big industry on the continent as well. Yeah.
That's the interesting
Agriculture.
thing.
Yeah.
Agriculture. Yeah, you can get very creative with tokenization. Essentially, really what you're doing is securitizing any asset and then going ahead and making it a little bit more accessible, a little bit more tradable, et cetera. So it's always great to see new use cases. Cattle, I think, is really cool.
Yeah, no, 100%.
Other than that, do you have a question from the audience here? Michael is asking if you work with fiat currencies.
Yeah, so well, especially on our ecosystem, right? So we have an onboard where we basically take fiat currency and then we basically tokenize that to give them a stable coin and then participate in, the purchases of the digital assets across all of our platforms. So yeah, that's how we kind of use fiat currency and then just give them a stable coin, like a digital representation of their fiat currency for them to kind of move through the ecosystem, frictionlessly. So yeah, we have a fiat currency on-ramp.
Very nice. So we're almost at time, but last question for you. I did want to ask, what's still missing? I think there's a lot of progress going on, but what's still missing for emerging markets to kind of catch up or still build out, their infrastructure in the tokenized RWA space?
What's still missing? Yeah, I think, education, right? And I think that's always a big thing, right? And every single one of these crypto events that I kind of attend, it's always a thing of education. The African market in its entirety, they fully understand, or let me say, some of them fully understand, the potential of digital assets in its entirety. However, majority of the populations aren't really awake to digital assets like that, right? So I think education is a big thing, and it's something that we're also quite passionate about here. And obviously, when we're passionate about something, we tell everybody and everyone that we can about what we're doing, just to kind of educate them, and hopefully that kind of network effect will have a wide reach one day, right? But yeah, like the space is still new. Education is still quite important, especially in the stage of the game. And yeah, it's only a matter of time, right? It's only a matter of time.
Absolutely. Let's see. Questions. All right, we'll take one more question from the everyone just jumped in on the last minute, literally. Let's go with legislative. Do you find the legislative framework mature enough for the deployment of these solutions in emerging markets?
Yeah, so look, here in South Africa, I feel like we're a lot more we're in a much better space than what the US is. I think our governments this side, are quite open to digital assets. So for an example, and I think it was either you or Nick in the beginning kind of brought this up, is that Africa in general just has a lack of infrastructure, and that's why blockchain technology kind of coming in to kind of be that infrastructure is quite a powerful thing, right? We don't necessarily have a lot of friction from our governments and our legislations. However, we do work very personally and very closely with one of the best legal firms on the continent, and they've got an entire tech division. And really what we're trying to do is trying to promote this collaborative effort between what we're doing and where the industry is going, and how any kind of legislation and the governments are also kind of moving. And I feel like legislation and any kind of regulation shouldn't be something that's fought. I think it really is just a collaborative effort with them to kind of pave this new digital future, right? So yeah, we walk that line, and we have really great people guiding us in the space to cool, there's a red flag, don't go here, this is free to kind of roam through. And then, yeah, if we ever kind of get to any kind of trouble, we kind of figure it out together with legislations, with governments and things like that. And that's only because they're open to it, right? And again, it comes back to the point of let it be a collaborative effort. Let's not fight, fight disruption, right? Yeah.
Makes sense. All righty. Well, with that, Chaz, we'll be transitioning to the next person, but real quick, how can people get in touch with you if they want to work with you and so forth?
Yeah, so you can visit libex.ai to kind of see what we're all about. And then you can also hit me up on LinkedIn, very active there. So Chaz Dunn on LinkedIn. Yeah, we can definitely connect and chat.
Perfect. Thank you so much, Chaz. Next
Cool.
up, we're going to be touching on Mavuso Capital with Lethu Malimela. Lethu Malimela began his career in financial markets and the heading markets of 2007. He was responsible for the trading desk of a Johannesburg stockbroker, where he traded on the JSE on behalf of private clients. Fast forward in 2014, he felt the need to establish his own company, hence the founding of Mavuso Capital. Lethu holds a BCom honors in economics from the University of KwaZulu-Natal and a BCom honors in business management from the University of South Africa. So, without further ado, Lethu, how are we?
I'm very well, thanks. And you, Jason?
Doing well, doing well. Excited for what you have to share with us. Floor is yours.
All right. Excellent, excellent. Start. Okay. Thanks very much. Yeah, thank you for the opportunity. I'm very glad to be here. I just want to share this screen with you. Okay. You can confirm you can see my screen?
Yes.
So a little bit about Mavuso Capital. Thank you for the introduction. But Mavuso Capital is based in Johannesburg, South Africa. We are what is known as a financial services provider in South Africa under the FSCA, Financial Sector Conduct Authority. So we've been trading on behalf of clients for some time, for a number of years, well, since 2014, and we've sort of grown into the space now into crypto assets, and that is how we find ourselves being involved with tokenization of real estate assets. So I just want to speak a bit about the development of the regulatory space, and then share with you a use case that we are working on at the moment in terms of tokenization. So in South Africa, as I think Chaz has mentioned, the regulation has developed quite aggressively in the last few years. We found ourselves having to upgrade our license late last year in November 2023, in line with the legislation. And there's a number of issues that South Africa is dealing with in terms of regulating the space, because it's something which is new to everybody here, and it's something which many people are interested in, but it's something which people can, as you know, you've seen the cases in the US with FTX and others. You've seen the cases where there have been financial losses. So there are a number of concerns, and people are the regulators are very careful to get the right people sort of trading in these products. So we find ourselves in a situation where, at the moment, what has happened just a few weeks ago, a number of what they called crypto asset services provider licenses were issued in South Africa, 75 of them. And I think this is quite relevant for communities such as DigiShares and the tokenization of real estate assets. Because what it means is that a number of people, in fact, I thought that when I saw the number of 75 licenses, I thought it was a lot, but maybe not, and in fact there are going to be more. But in terms of growing the ecosystem into tokenization globally and on the continent into developing markets, it's a very positive thing, and it will allow people out of South Africa, out of Southern Africa, to participate in that market with confidence, because like I mentioned before, people may have been resistant, people may have been nervous to get involved in crypto assets, to get involved in tokenization, investing in whatever type of assets really. But having regulated entities is an encouraging step. I just want to share with you an example of a development that we are working on at the moment for tokenization to bring onto the DigiShares ecosystem. On the northern coast of, on the east coast of South Africa, in KZN, there's a beautiful piece of land that an associate of ours is working on at Umhlali, and this is a very good example of what can be accessible utilizing tokenization and via a platform such as this, as DigiShares, because it gives access to, it gives true meaning to decentralized finance, because what it does on the one hand, on the side of investors, it lowers the entry barriers. People don't have to be multimillionaires to invest in property. They can invest a smaller share of money with the fractionalization capability of this technology. So I think it's quite important to highlight that fact. On the one hand, you're having people who are previously not able to invest, they can access the market. On the other hand, if you are a real estate developer, such as the associate we have here, you are now able to access a far greater investment pool, because your market is now global, as opposed to just local people in a country such as South Africa, or in the local space. I think that we as financial services providers basically playing a broker role. We are finding ourselves in a very opportune space, playing a very important role in that market, because of that aspect of decentralized finance. What you have here is a development which is happening over a period of time, and people both locally or however they access this investment will be able to enjoy the benefits of such an investment. That's really the extent of my presentation, Jason. I just wanted to share this use case with the audience.
Awesome. Thank you for that, Lethu. Once again, audience, feel free to throw some questions into the chat. We have a few minutes left in this segment, so I did want to ask, what kinds of returns can we expect in regions outside the US, such as, in South Africa?
So in this particular investment, investments in real estate, you typically, let me begin by highlighting that in South Africa, as you know, in the US, the inflation is quite a major thing. Your Fed is focusing on limiting inflation down to 2%. Our inflation rate is a little bit high at around 5%, but the real returns on such investments are in excess of 15%, as much as 20%. Those are realistic targets here.
Yeah, those are definitely bigger than what we've seen, at least stateside here in the US, which actually brings me to ask, so, a lot of people back in, over the last few years, let's say, have really gone for the crypto, very high generating yields and returns. Do you feel that, investing in other assets such as that South Africa will start bringing some of those crypto native investors over to the real world asset side, or is there still some friction there?
I definitely think so. I think what tends to happen is that you will find that the section of the population that is sort of, let me say, more educated about financial markets, about the stock market and things like that, traditional investments, will the growth in that market in terms of numbers can be sticky, whereas with real investments, real estate in particular, real estate and agriculture, I think we're seeing a far more aggressive rate of growth that's on that side of things, because people understand those products more. So people that are new to markets find that more accessible.
And then on the developer side, you mentioned, you have access to more investment because now it's a little easier to hit a global market of investors. But, what's some of the local what are the local options, right? So if I wasn't going to tokenize a property, what would I go to a bank for a loan? Is there's financing locally, and how does tokenization kind of help either streamline or even eliminate that option, with a superior one?
So yes, there obviously is access to your traditional banking system. You do have banks that will finance real estate developers, but for new developers in particular, it's relatively difficult to access that market. So a technology such as tokenization, what it does is that it, like I was saying, it democratizes the space, because it lowers the entry barrier essentially. It allows new developers to either, if they already have a development, to monetize it by bringing it to market via tokenization, or to essentially, if I can put it this way, partner with the mass market via the tokenization system, whereby you can use the platform essentially as a crowdfunding type of facility and raise a development via that channel.
Makes sense to me. I mean, with those interest rates, it sounds like the bank option might be a very high cost of capital for the developers. So in this way, you're essentially using other investors, yes, for the capital, but maybe they get a longer term horizon, right? Essentially, they are investing in equity. They are investing in the region, and of course the development, for a longer term horizon. But of course, they still have the option to liquidate out as needed. But with that, Lethu, thank you so much. If people want to get in touch with you or Mavuso Capital, how can people connect with you?
Yeah, so mavusocapital.co.za. as well as on LinkedIn. Mavuso Capital is on LinkedIn, and myself in person, Lethu Malimela, on LinkedIn. I'm available there anytime people can come across and make contact with us.
Fantastic. All righty. Well, we'll be transitioning to the next section here to stay on schedule. We'll be talking with AltsDRX's Sachin Joshi, their co-founder and CTO. With 23 years of experience in technology and business, Sachin is a passionate entrepreneur and innovator. As a co-founder and CTO of Alt Real Tech, he leads the development of the world's first digital real estate exchange on a permissioned blockchain. Previously, he co-founded Your Own Room, a prop tech platform for residential real estate rental and management, driving its development, market expansion, and sales targets. His goal is to democratize and digitize the real estate sector, providing transparent opportunities for investors and owners. Sachin, how are we today?
Pretty good. Thanks a lot. I hope you can hear me loud and clear.
Loud and clear, and we can see your screen as well. Floor is yours.
Sure. Thank you. Thanks for inviting me for this panel discussion. We are called AllDRX. We are world's first digital real estate exchange. We are based out of Bangalore, India. AllDRX is a stock exchange-like marketplace which is focusing on enabling the middle India to buy and sell tokenized real estate 1 square feet at a time. And this is very interesting to talk about because I see the fellow panelists have already covered the advantage of tokenization and the possibilities it creates in the global market. If we talk about emerging markets, India as a chapter is something which we cannot miss. And there are a few very interesting facts which we have gone through as an experience while launching AllDRX in India. First and foremost, India as a nation itself has a population of 1.4 billion people, out of which the maximum size of savings which the retail investors are doing, they do it either in real estate or they do it in form of gold. Equities and mutual funds have started picking up off late since last 8 and 9 years. People interested in equities have started going up. Real estate has been an area of interest, and it has a very high level of emotional attachment when people invest in real estate. They always have loved to touch and feel the real estate, and there's a lot of leverage which people take to buy a good real estate in India. So today, if you want to buy a 3 BHK apartment or a 2 BHK bedroom, hall, kitchen kind of a residential apartment for yourself, you definitely need to go and knock door of financial institution to give you a loan. This is one such decision which every buyer in India has to take very cautiously, that if I'm investing in real estate, is this for my end use or for investment purpose? So with banking infrastructure being very good in India, the loan disbursements are pretty good. People have been buying home for themselves to stay. Their second homes as their investments are something which they want to do very cautiously. And that is to do with without taking a big leverage on as EMIs from the bank, what is that they can do and include real estate in their investment portfolio. And that is where the power of tokenization is solving the possibility of allowing people to buy 1 square feet at a time on AllDRX. So what we have done in AllDRX is we have fundamentally created indexes, and these indexes are just like mutual fund investment opportunities, where you as a buyer can come and pick a NAV of that index. And under that index, we have created portfolio of properties in which these NAVs investment will go through. So as an asset manager, we as AllDRX as an asset manager also goes and curate the supply of these assets, decide them against certain criteria of acquisition, and bring for investment for the investment in these indexes. So this whole process of sourcing the asset, bringing them to the platform, bringing the buyers on the other side to invest in these assets, that's the whole experience which we deliver through AllDRX today. So if I proceed further and share my team here. This is the founding team which we have. We are a set of 4 key members here. Anand, Avinash, me, and Avijit, we all bring together immense experience in the real estate and technology space, and that's where the whole conceptualization of all DRX happened in terms of creating a financial product in the space of real estate and offering through method of tokenization. These are the core 4 problems which we have already discussed, which is the illiquidity of a real estate asset. So today, if you really invest in real estate, the excitement of investment is extremely high amongst the retail investor. But the larger question is, how can you sell or exit the real estate when you really want, cash for yourself? A typical real estate buy and sell process can take 3 to 6 months to come inside and get out of it the day you take a decision of it. And then, of course, there is a cumbersome process of doing registrations, doing documentations, going through the legal framework to ensure the property is attached to your name. And on top of it, geographical disparities can also become a bigger problem. India is a vast country. We have around 29 states in itself. I may be in one part of India. Let's say I'm in the south part of India and I want to invest in the north part of India. The trust levels are extremely low because I'm not geographically or physically present out there. So my choice of investments are very limited to south of India only. And the last piece is the regulatory acceptability, which is there. Now, whenever you invest in real estate, it is a long-term investment. You need to everybody who invest in real estate holds the asset for 7 to 10 years. So you got to see that you are doing it in the most safest way, in the most regulated way. What do we offer as a product offering on a platform? We have a digital token, a tradable digital token, which is called All Square Feet. All Square Feet is basically a trusted property-backed tradable digital asset. So today on All DRX, as a user, you can come and buy one All Square Feet, which will give you the opportunity to invest in either a prime land investment opportunity or a student housing opportunity or a co-living opportunity. This is what it enables. The fundamental belief is the core value proposition which we have unlocked for people is created a financial innovation. Now, this is very critical to talk about. When we talk about tokenization in a market like India, the key consideration to keep in mind here is anything to do with investments in real estate has to come as fiat as a currency. The law of land doesn't allow you to use crypto to buy a real estate asset. Second consideration is native Indians or non-resident Indians can only buy real estate in India. Foreigners are not allowed to come and buy one token of real estate assets right now. So what is key consideration which has been included in the solution is create a financial innovation which actually is regulated by the fact that you're paying the right duties against the transaction which are happening, and capture the intrinsic value in a financial innovation product, which is a digital asset which you are creating, to say that this digital asset, which is one All Square Feet, is holding intrinsic value of 1 square feet in the real life. So that is the maximum effort which we have spent on in terms of defining the product under the regulatory framework which is applicable here in India. Second part of it is that, and this is the trust element which we build in our customers, is that fine, is it a marketplace where I'm just listing the opportunities and selling the tokens and then leaving the customers for themselves to figure out the next few steps? The answer is no. We are also the asset manager because we bring a lot of real estate experience along with us. So we manage these assets for the customer for the life of the association they are going to be carrying with us. The last piece of the proposition is we have created a full stack stock exchange like marketplace, which is doing today a P2P buy and sell order process. Now, our platform is giving a similar experience of a financial market solution. So think of it that if you are working on a equity market solution or an equity market platform or a broker platform where people are able to see some private opportunities which are off-market deals, which are basically, we call them as private opportunity with high entry price discounts which are available if you have a high value check to give. Followed by something like a IPO kind of a situation where, okay, you don't have, let's say, $100,000 to give, but you have $10,000 to spare. Why don't you participate in the next level, which is called the IPO? We call it first square feet opportunity. It is just a replica of what a initial public offering can be. last not the least, somebody who is not really carrying $10,000, he still want to participate in real estate investment. He has $100 kind of an investment possibility. He can come straight to something called TradeX. TradeX is the P2P marketplace which we have created, where the buyers and the sellers can do the transaction of this digital asset, which is holding the intrinsic value of 1 square feet. So I think I have been listening to a lot of great inputs before I got a chance to talk here. And I think the core proposition of creating a tokenization platform in an emerging market like India is the following, that first and foremost is going through the regulatory aspects of the solution is very critical. Figuring out what are the right way of establishing the right acceptance of the token. Why should I believe that this token is holding intrinsic value of 1 square feet? Because it is digital in nature. Who is the person who is really signing off to say, yes, there is a real world asset which is going to be available, or this token is being backed by it? And those are the considerations which people are looking for in the emerging market to establish these kind of investments are safe. And that is where we have created combinations of the regulations which are available at our disposal by paying the right kind of taxes, by paying the right kind of duties on the transaction, in engaging the role of custodians which are available today, and doing a fund architecture which is very safe in nature. So as I rightly said earlier, we only accept fiat as a currency for people to invest on our platform. The custodian of this fund is something which is a third party, which is taking responsibility as an escrow agent to hold this fund till the time it is disposed for the purchase of the asset. So the good news is people in India have access to a lot of financial payment rails. Today, I'm sure a lot of people would have heard of UPI, which is doing a miracle in India. Every month, we clock around 8 to 9 billion transactions through UPI. So I have the ability today on my platform to scan a QR code and just pay 5,000 rupees and buy this digital token, which is available on all DRX. So we have the financial rails which are really available to the last set of people in India. We have the set of regulations which have been configured and customized for the purpose of issuing this token. On top of it, what we have tried to include here is, and this is the gap area which in the emerging market, which is like India is there is no role of a digital custodian as of now available in India. So if you say that you have a digital custodian who can be another party who is participating in the issuance of the token or the custody of the token, that's the role which today is not available. We have custodians in term shape for the equity markets, but we don't have custodians for digital assets yet. So this is the proposition which we have brought forward. People are buying it. Today, we would have done transactions almost around a little less than $1 million. We have around 20,000 users on the platform. The beauty of tokenization, which I really want to share here, is that being a huge country, which is spread in 29 states, we have buyers on this platform from 38 different cities. So people who have not even visited that city in their life are coming forward and investing money in these real estate assets out there. So fundamentally, tokenization as a solution, which I think in my mind, in any emerging country right now, and we have operated in India, so our experience is quite deep in India, is there are options available to tokenize an asset, but that has to be done under the ambit of existing regulations which are available. And we need to start working with the regulators and the ecosystem to establish role of digital assets and different stakeholders in the digital asset ecosystem who can come forward and take responsibility of either a custodian or either, for example, today on a platform like all DRX, you don't have blockchain wallets which are integrated for a very simple reason that if I have to tell somebody that you need a blockchain wallet to come inside all DRX, it is a no starter for people. But people are very, very comfortable in having a simple sign-in account, which is followed by online payment using a QR code. that's the smoothness which they expect in a solution. So education, regulation, and the innovation of any financial rail which is available around us in terms of tokenization, in terms of doing a tokenization project is a very good head start here, at least in India we have. And I think we are looking forward to take this solution to the global market. As we speak, we are working on a dollar denominated token, which will enable the people of India to invest in assets which are either in London or Singapore or Australia. Similarly, if a foreigner who is sitting in, who is having a nationality as an American citizen or a German citizen, he can come forward and buy real estate tokens from India also. So this is a true extension of first, interstate investment opportunities just in India, an extension of that in the global market, which we are launching very soon. So that's the story which all DRX has. We have very closely worked with the regulators in this space, try to even help and contribute on the white papers around tokenization in India. And that's quite a very interesting journey for us. We are more than happy to share our story and experience and extend a piece of help to the fellow team members. And if anybody wants to reach out to us, I'm on Sachin at alldrx.com. More than happy to have a conversation. I think I am done. If any questions are there, happy to answer them.
Fantastic. Thank you so much for that overview in India's market. Definitely always an interesting one to tap into. We've seen letters of credit being written through Citibank. We've seen a couple other use cases. Really cool to see, how you're applying this technology now to real estate. One of the questions from an anonymous attendee is, hi, Sachin. Understanding that the individual owns part of the physical asset. However, how does it work in terms of the yield? And I'm assuming they're referring to distributions and so forth for the asset holder. So how would someone receive those distributions?
Yeah, it's a good question. And I think before I answer that question, it is important to understand that who really is responsible to do the distribution of the yield and how does it happen is something which I'll touch briefly on that. So whenever we look at tokenizing a real world asset and especially real estate asset, the first and foremost thing is that it has to be brought to a financial structure, which is who is owning this real estate asset. Right? You cannot have 10,000 people owning the real estate asset. What you do primarily is you create a SPV, which is a special purpose vehicle. A special purpose vehicle is nothing. It is just either a private limited company or a LLP company. You form this company. The company is going to buy this real estate asset. Now, once the asset has been brought to a special purpose vehicle, the ownership is with one company only. Any investor who is participating to put $1,000 to another $100,000, they are giving money to the SPV to take the share in the income of this asset, right? So that is where first thing is established. The ownership of the asset is sitting with SPV. Then comes the question of who all have invested in the SPV. There is a cap table for the SPV which is available. And against the cap table, the SPV partners and the SPV directors are responsible to distribute the income to all the token holders who are available in the cap table. So that is the prime expectation of the SPV role. In the Indian scenario, in a long term, which is in a 7 to 10 years or 7 to 9 years term, 10 to 11% or 10 to 12% is the yield which you can expect. Again, this yield is combination of the capital value appreciation and the income, the rental income, which you can get out of the asset.
Fantastic. Thank you, Sachin. Alrighty, well, we're coming up on time here, so to keep the train going, on to our next panelist, we'll be talking about tokenization on the Western Hemisphere. We're going to be talking about Mexico and LATAM. So Gabriela, the co-founder and CEO of Polibit, is an accomplished architect with an MBA from Acton, renowned for her unique blend of technical and business expertise. Before launching Polibit in 2023 alongside Martha, her CTO, Gabriela's career was marked by significant achievements in both corporate and startup environments. She spearheaded over 90,000 square meters of development, demonstrating her keen insight into urban planning and real estate. A proven problem solver, Gabriela facilitated over more than 50 innovation sprints, driving substantial results across various ventures and industries. Her strategic acumen was particularly impactful in the fintech sector, where she played a key role in scaling operations by over 35% monthly, underscoring her ability to drive high growth and navigate the dynamic landscapes of business and urban development. So, Gabriela, Mena, Archila, co-founder and CEO of Polibit, how are you?
Hello, Jason. So nice to see you and be part of this amazing webinar. Thank you for hosting me. And I'm very happy and thrilled to share with the whole community how tokenization is shaping this part of the emerging markets, which is LATAM. So let me share my screen so we can start. Ready? Can you all see it?
Yes, we can.
Amazing. So this is, I can definitely relate with a lot of what we have already talked in this conversation, because as you may see, most of the problems, but also the challenges and on the other side, the opportunities are very similar from one emerging market to the other. So I'm sure you're going to echo a lot of things that I'm going to share with you. So first of all, let's try to understand how are the dynamics in the ecosystem of LATAM. So first of all, well, 13% of the world's urban population lives in LATAM cities, which is a lot. And those cities have been growing very fast in the last couple of years. I will say since the 1950s, it has been 93% of growth in urbanization. So that's a very high rate of urbanization. And that brings a lot of challenges because urbanization has to keep up with the demand of the population, right? And that happens a lot in the other emerging markets. So let's see what it happens. In this graph, you can see how Latin America has grown so fast, even more than sometimes Asia or Africa, for instance. And this has implications directly in the way that the cities have been shaped. So let's see in here. Some of the biggest cities are in LATAM, let's say Brazil, Mexico, even Venezuela, when you see it here. And most of the big cities are also, and all the big cities have also a lot of population within a small amount of land, which again brings even more challenges to the table. Why? Because those cities grow in a chaotically way and not necessarily solving the infrastructure in the best way. So what happened? So first of all, most of the projects or most of the capital that should be created in the cities, let's say the value is not created. So those cities are underperforming in the creation of richness from their population. And also in the infrastructure point of view, they are underperforming when you see the average performance of our other city among the world. So, but why? And it's very similar to other cities in emerging markets because they grow so chaotically and so fast. We have this type of cities where the type of housing is not the best, where you have problems with sustainability because maybe you are one of the biggest areas with most resources, natural resources, but because you are making a bad use of them, you end up with cities like this, with where are the trees? Or for instance, where are the streets in here? You know, like it's not clear how this city was created because it wasn't a plan, you know, they only pop up literally. Then you can see a lot of places like this in LATAM when you have so much contrast, a place for like a lot of rich people, let's say, they have all this place, and then these other areas with a lot of problems of housing, but also problems to have resources to electricity, such as water. So what happened when, well, then you have problems with transport, you have housing problem, and you also have a lot of insecurity. But the whole problem is also enhanced because of how those structures or infrastructures have been created. And for instance, you also have pollution situations. So whenever you see here, okay, again, all these resources have been eaten by the city, not necessarily in the best way. So now we ended up with huge amount of cities that are not necessarily built in the best way again. And we have this type of problems. And that happens not only in Mexico and not only in Brazil, that are the biggest countries in Latam. It happens even in the smaller countries. So what happened? We have a transportation problem. Most of our countries depends on cars, and that creates pollution again. And that creates, at the end, a very bad ecosystem that is underperforming in infrastructure, in the infrastructure way, but also not necessarily helping to build more value or create more value in life and in the life of all these inhabitants. But this is, again, this is why we're here, right? Tokenization can be a way to make a solution. So what is happening from the urbanistic point of view? There are ways that we can reshape those cities. And those cities can become smart cities and have the use of the data and other systems that can help us enhance the quality of those infrastructures and those cities, so they can have a direct impact in the people, in the population. And this is actually a very high need. Only in Mexico, this is a study made by MIT, they need to invest 4% of their PIB, the growth of their and the value of the country for the next 20 years to be able to tackle the demand of housing that they have in the next year. So that's huge. And so those cities need to still grow, but they can grow in a very different way, right? And here we can see other options or other projects that are being built with data that those cities have, because at the end, the people is there, the infrastructure is there. The only thing is that we need to reshape and meet the demand in another way. But what is happening, even if the demand is here, the problems from an infrastructure point and urbanistical point are there. So the market is needing more projects, more real estate, but the problem is that those real estate companies are having a lot of challenges to raise capital. Why? Well, first, because there is a lot of economic volatility. We have a lot of political insecurity or inconsistency, so that creates a lot of economic volatility. So there is a lot of shifts in the regulation, but also in the processes. So for instance, today they can ask you something, for example, the banks, but tomorrow they can ask you for more or different processes. So it takes time. The cost can be high because there is a lot of collaterals, the guarantees are high, the fees are high, and there is a lot of intermediaries. Plus, there are a lot of outdated processes. A lot of things are also done by paper. We do not have open finance. So if you add up all these problems, how are real estate companies gonna meet the demand that we already saw? It's so urgent in our countries. Well, that's where real estate tokenization can become an amazing partner and be part of the solution instead of the challenge. Plus, in the other way, because if you tokenize something, as we all know here, you give access to so many people that today may not have the access. And that's exactly what happens in Latam. We lack of infrastructure. We have a lot of access of barriers to access financial products. Even more than 58%, according to IDB, is out, don't even have a bank account in the population of Latam. The cost of mobile still is very high in some areas. And for instance, of course, we lack to access financial products. Imagine if we only have 50% of the whole Latam who doesn't have necessarily access to banks, not to say other type of financial project, not to say other investment options. So there is a huge opportunity to unlock to a broader investor base that today has been completely out of the ecosystem of financial products and of course from investment options. So for instance, today as Polibit, we are tokenizing projects in Mexico, but we are having customers from other places from Latam. And the first thing that they ask us is, how is this possible? I've never seen this before. Is this real? Tell me where is this not working, or this is the dream, because I haven't seen that before. I never had this opportunity before. And we are like, yes, I know it's new. And but that's why this is the magic of tokenization, that you can have access from a very low cost to very good opportunities, right? So that's what we are doing in Polibit, is to become the first end-to-end solution in Latam for real estate tokenization. So what do we do? Well, we go to the real estate companies and say, hey, we can become your tokenizing platform, and we can give you the whole processes in one-to-one, so you can pretty much plug and play with us. We are currently working in Mexico, but we're also already working on being able to tokenize projects in other jurisdictions. And we'll talk about the jurisdiction in a moment. But the thing is, we'll help the companies list their projects, make them ready, see how they have to comply in the regulation point of view in Mexico. And we issue the tokens for them and list them on the marketplace. So any investor from around the world can actually come, and from as little as $500, they can invest in those projects. Within the whole system, you can manage the tokens. You can connect your wallet, or you can connect your exchange wallet. We gave them the time to do that. So most of our customers so far are not crypto users, are regular users, and they are paying with transfer or even fiat transfer or credit card or debit card. And we say, you know what, you can pay in this moment. You'll have your tokens and even the returns posted within your dashboard, and you'll have the time to select carefully with which wallet you want to connect or exchange. And that gives them a lot of time to decide what they want. We help them do that as well. And it eliminates a lot of friction in the first part of acquiring this type of investment opportunities. And it has been a very good way or strategy for us to onboard a lot of people who is new in investment through tokenization. Of course, because we are using the blockchain, everything is automatic. We can make the returns automatic, and we are looking forward to open a secondary market, starting as a private secondary market, but then we're looking forward to all the interoperability that will be available hopefully soon to connect it with them as well. But for the first part, it will be private. So pretty much what we do, as I mentioned, we can tokenize a project within 6 weeks. So if a company comes to us and they want to tokenize their project, we can do it very quickly. So they don't need to learn the whole thing to understand and look for other providers. We can give them the whole system like a plug and play, an end-to-end solution. And that is something that helps a lot for them, because let's be very honest. Real estate companies are very busy companies. They already have a lot of complex process to achieve, and real estate by itself, it's very complex. So whenever you say to them, hey, this is a new way for you to raise capital for your project, but you need to learn this and this and this and this and this, and it's technical, and these regulations and these providers, it becomes very hard for them to actually take seriously this opportunity, not because they don't want it, but because the process becomes very, very, very complex for them. So what we do is we tell them, we will take care for you, we help you, we will make the whole process for you, so you can tokenize as soon as possible. And that's something that is actually working. And of course, the costs are not as high as doing it from for yourself. We make all the connections direct, of course, because we're not a crowdfunding. We are tokenizing the projects for the real estate company, but all the flows, the money and the contracts and all the legal process happens directly from the real estate companies and from to the investors directly from within our platform. But again, because we are not a crowdfunding, it makes it easier to make those connections, but also for us to be able to help more real estate companies at the same time. Of course, we work very hard to make our platform ready not only in English, but also in Spanish, knowing that most of the LATAM countries are Spanish speakers. And we have this flexibility that I already talked about. And I think it has been a very, very important option to take into account, because we already know how crypto works, but that's not necessarily, as at least in our experience, the first customer that will look for you, because cryptocurrency or crypto gives other types of returns. This is something that we've been building for people who hasn't other options, but now can add to their passive income something that is backed by real estate, not in their country or in another country, but is a real asset, you know, and that's the difference for them. They may know how important it is to invest in real estate. They know historically it's one of the best investment vehicles. So it's easier for them to understand the value of investing in real estate. It's just that they haven't had the opportunity until now. And that's the problem that we are solving, the need that we are tackling. For sure, and on the other side, it has a lot of benefits from the real estate company point of view. First of all, because you can tailor the terms to make more profitable your projects. The time takes less. The cost can be even 50% less in administrative and legal cost without having to be a crowdfunding or without having to go through all the processes of have other type of financials. And something that we also say to the real estate companies is that you don't need to take out all of your other options of financing. This is only a complementary way for you to flexibilize a little bit your cap table. And for sure, because you can tackle a bigger investor base, not only locally, but also globally, as we all know. This is the first project that we tokenized in Mexico City. It's called Querétaro 37, and it's a project that the real estate company built to sell to investors that want to rent the properties in Airbnb. This is in Mexico City. This specific zone, it's very, very demanded for Airbnb. So this project is almost ready, and we are tokenizing one apartment within the project, and we are about to finish to sell the first tokens of this project. And for now, we've been working with other real estate companies in Mexico that are also interested in using our technology to fund most of their projects. We also know that in El Salvador, there is a new tokenization regulation that is becoming very attractive. So we look forward to open our operations in El Salvador and then to start expanding to the rest of LATAM from the real estate company's perspective. But from the investor side, we are already open to anyone in LATAM or even other parts in the world that wants to buy tokens from properties in Mexico. What we want to do, well, that's why I told you all this context and opportunity, because what we want to become is a catalyzer and make the city a better place to live, not only because the cities are have a better infrastructure and promotes a better quality of life, but also because it promotes financial inclusion, and those citizens can have access to better investment options and passive incomes, so their life can actually not only urbanistically become better, but also economically. So that's our vision, and I'm gonna share it with you so you can also join us in this quest. And thank you. I'm definitely available through LinkedIn. You can look for me, or this is my email and this is our website. Please look it, and we are more than happy to share more information about Polibit. And Jason, thank you so much.
Absolutely. Thank you so much for sharing that. Great to see the Latin America area and how that's progressing. I know that that's been a topic of conversation around the tokenization space for a while now. I did want to ask, so you did mention El Salvador. They're very forward thinking. Bitcoin is a legal currency, legal tender there, as well as we saw a bond recently to build a Hilton hotel at their international airport. So El Salvador is great, but how does regulation look like for Web3 in the bigger Latin American countries such as Mexico and Brazil? Is it pretty clear cut, we're good to go, or are there still some barriers to entry on that end?
So many barriers. That definitely, I will say El Salvador is leading the way from a regulation point of view. The rest of the countries do not have a clear path to go through. So you need to actually go and understand what is built, so where you can start, and then try to figure out the next path. So for instance, what we did is we partner up with a very big legal firm in Mexico, and we built a whole strategy with them to understand from where we could start and start talking with the regulators to say, hey, this is us, this is tokenization, this is not crowdfunding, this is not crypto. Like you have to, as the same way that you need to educate investors, you still need to educate the regulators, right? So we've been talking to them and explaining what we are and what we are not, so we can build together a new regulation. But what I have to say is that Mexico and Brazil, for instance, are very open-minded, and they do want this to happen. So what I've experienced is that even if there is not a regulation clearly defined, there are paths or are parts that are already defined that you can build upon, and they're open to work and build the regulations. That's the way of other companies started in those countries, for example, Bitso in Mexico. So they're used to experience of the creation of a new path with high-tech companies, and they're open to do that, I will say. So it's difficult to navigate great areas, but it's not impossible. It's more like that's the only way to open the path and make it and have a clear regulation. Because at the end, we all know that you need the local regulation to work to be able to tokenize a project within their own jurisdiction. If you make an SPV, it makes up the whole thing different. You can make it, but it's different. So as long as you are able to find a way to tokenize in the same jurisdiction as the real estate company or the real estate project is, the better.
Understood. And touching on the Querétaro property that you brought up, really cool that you guys are already getting your hands on real assets to tokenize. Is that open to retail investors or accredited only? Who can participate? And also I wanted to ask what the institutional ecosystem looks like in Mexico, obviously, or in general in Latin America. Obviously, as we just talked about, regulation's a little tough, but wanted to see if there was any insights you can give us on at least institutions showing interest and wanting to start participating there.
Sure. So yes, it's open to retail investors. Anyone can invest, because we didn't issue our tokens in the US. We cannot sell to anyone from the US. And that happens with the same countries that have a protective regulation to the retail investors. But as long as they don't have it, anyone who reach us and wants to buy a ticket, they can do it. and the whole process will, you still have to go through the KYC, et cetera, but once you're clear, you're definitely be able to buy a token, right? So that's the first part. And the second part, I will say, it's very important to understand what is regulated and what is not, to have an open conversation with the regulators. I will say that is very important, to have a very good legal team to help you understand and navigate the issuance of a lot of the regulations. And because something that is very interesting in LATAM in general is most of the law, it's built in a sense that if something is not strictly prohibited, it's possible. So you need to understand what is that and how you can build your project. So for instance, for now in Mexico, what we are doing is, or what we have been able to tokenize, is debt. We cannot tokenize equity, and we cannot tokenize property itself, because the system of registration of the properties is not aligned to the blockchain. So, but we can do debt. And I think the best way to start is to have one opportunity, so if we can do that, there is a lot of things that you can do with that. That's what we're building right now. And hopefully what we want to build in the future is to open the conversation, to have more players also in Mexico and the rest of LATAM, so we together can, help the regulators build a new crystal clear path for everyone to go.
Fantastic. Well, thank you so much for those insights. How can people get in touch with you, Gabriela, if they want to work with Polibit, invest in Querétaro or any other properties coming on board soon? How can they best find you guys?
Okay, wait. I'm gonna share my I'm gonna share on the chat, if that's okay, my LinkedIn profile, and leave you also my email and our website, and I'll be happy to connect with everyone.
Perfect.
Thank
All
you.
right. Yep. What was that? Oh, perfect. Okay, cool. So we are coming up on time here. I know we're almost towards the end of our allotted time for the webinar, so I do want to keep it going. Moving on to Ari Comert from ComLaw. Ari is a seasoned lawyer admitted to practice in multiple jurisdictions, including New South Wales, Australia in 2007, Ontario, Canada, 2013, and the Turks and Caicos Islands Bar in 2017. Currently working as general counsel at Arena X Labs, Ari deftly navigates the landscape of emerging legal challenges. With extensive experience and a global perspective, Ari brings invaluable insights to addressing the dynamic and often uncertain terrains of today's legal environment. So without further ado, Ari, how are you?
I am great. I don't know. I'm trying to share my screen. I don't know if you can see my slide here.
Yep, we can see it.
Okay, fantastic. So in the interest of time, I'm going to just highlight a brief overview of what's happening in the legal and regulatory framework in the Caribbean specifically, the approach to regulation, and what we are doing in the Turks and Caicos Islands, where I am an attorney and I'm located, and a project that, after years of planning, is about to be launched within the next week or so, too. So, trying to just see if I can change this. So I'm just going to skip all this. So I just want to give a very high overview. This is the legislation in place or policies in place in the Caribbean as it stands today. As you can see from this list, there is at least 11 jurisdictions that have actually regulated in the space of digital assets or virtual assets. And there's combined about 13, there might be one or two more to that actually have public policies and methods in which digital assets are addressed. So this is a very aggressive regulatory environment. The Caribbean definitely sees this new technology and digital assets as a place it wants to regulate, and a place where it wants others to find homes in to start companies. So That being said, most of the legislation that is currently in place is geared toward a very specific type of company. That is, people who are looking for jurisdictions in which to set up their operations, and generally those are not internal operations, they are for external products. So for example, think about Cayman Islands that has a very robust foundation business that allows token issuers and Web3 companies to set up operations and foundations there to essentially offer tokens, NFTs, etc., to external markets, not really thinking about the domestic Cayman population. And that is a theme throughout all of the legislation, how these legislations are currently being adopted in the Caribbean. And that's just from my viewpoint. So one place that you won't see on that, but is up and coming in this realm is the Turks and Caicos Islands, where I am an attorney. The Turks and Caicos Islands has no official regulation or documentation that addresses virtual assets or digital assets or tokenization directly. However, being an unregulated space with having no securities laws or digital asset laws, it's a bit interesting, and it's a bit of a legal quandary of how we can make this thing happen. So in our particular case, myself included, I'm part of the Turks and Caicos Islands working group on addressing the lack of regulation and what type of regulation we want to pass in the Turks and Caicos, and specifically to carve out a niche area in which we can differentiate ourselves from others with having a more of a domestic feel and domestic applicability to that legislation, not just to be a conduit in which foreign entities can flow through, which is the typical offshore structure generally. So that being said, the Caribbean and possibly parts of Latin America, specifically from other presenters and other emerging markets in the globe, have one unique similarity, despite of where everybody's located, is that there seems to be an ownership class where there is a vast majority of ownership concentrated with the few. And in the Caribbean specifically, that few is foreign owners. It's not even really domestic ownership. So the challenge is, how do we reintroduce and realign real estate economic development growth within the Caribbean for the people of the Caribbean? It's a very interesting challenge, and I think tokenization offers a lot of solutions in that realm. So I'm going to just tell you now out of our, because a lot of this is happening very quickly in Turks and Caicos. We have no virtual asset legislation. We have no securities laws. We do have a outdated companies ordinance that does allow for the public sale of shares to the public via a prospectus filing. For the last 2 years, we have been directly working with the Financial Services Commission of Turks and Caicos to understand and make them comfortable with the tokenization plan, which is essentially, like others have said, it's an SPV that's going to be set up where shares are going to be sold to the public and they are just digitally noted. In our case, we're using a white label solution from DigiShares to note all of the share ownership. So after years of putting this together, and with finally the Financial Services Commission comfortable with us as a company, the laws that will permit this to happen here, we need to find a project. And that's another challenge. In a very hot market like Turks and Caicos that's seen unprecedented growth to the tune of 200% over the last 4 years, finding good deals in real estate that you could translate to the common person is very, very difficult. But we found a partner to allow that to happen. We have many new developments on the island from every brand of hotel you could think of. We are 95% related or directly or indirectly related on tourism income. So that's just the type of properties we have, the vacation properties and hotels. The Hyatt Andaz Hotel is building such a hotel on the island. And after just many discussions with them, They understood the lack of participation of locals in the Turks and Caicos into owning any properties in any hotel on the beachfront in their own country. They saw it as an opportunity to carve out a few units in their hotel to allow to be owned through this tokenization process. Not only did they do that, they offered those units at substantially below market rates. So right off the bat, it's just a good investment deal. We then had massive discussions with a newly formed entity called TCI Finance, whose initiative was to find ways in which to include fintech and diversification of industry in the islands. I spoke to them as Utopia, which is a platform that we have on what we were trying to do, and that we had a willing developer, and there was this kind of deal. And TCI Finance linked us with the National Wealth Fund of the Turks and Caicos Islands, who was the promoter or the originator of acquiring those assets in the SPV. So the Turks and Caicos National Wealth Fund was investing in these 2 condominium units at below market rate. It is then going to translate share sales in that SPV that holds those units to Turks and Caicos Islanders as a first port of call. Not only was it going to do that, it was going to guarantee the investment, meaning that at any time economic realities happen, and if you're coming to the retail market, a lot of problems can happen. So they wanted to have some safety net. So anytime somebody wanted to exit the investment, the wealth fund was going to immediately repatriate that person's investment back in return from the shares. So the risk points to the lay investor or the common person was minimized. They're buying shares in a company that already is below market value. There is a recurring dividend return that's going to be happening through a managed property like a branded Hyatt does. The government is investing with the people and is providing the opportunity, is underwriting the deal, both in closing the acquisition as well as exits. And on top of all that, there's likelihood that transactions that happen with these crowdfunded tokenized real estate projects are going to be done on a tax-free exempt basis. So it just makes it an even better real estate investment generally for the people. And without this type of a solution, and without the combination of both private industry, tech providers, without the developers buying in, government investing in its own people, and then the regulator digesting all of this very complex stuff to be able to allow a public sale to happen, I think is a monumental occurrence, not just in Turks and Caicos Islands, but just generally in the globe. So we are very excited about that. We've been working on that. Our first announcements and press releases should be upcoming in a couple of weeks. Unfortunately, this is for Turks Islanders, so this is not open to outside investors. But as a platform, as we further grow and offer more products, we have to be cognizant that we can't self-fund everything internally ourselves either. So there will be opportunities for outside investors to share the incredible opportunities that exist in real estate in the Turks and Caicos Island, which is one of those well-structured investment vehicles for real estate being a tax-free jurisdiction. So the government is using this as a test pilot. We're using this as a test project. Other developers have keyed in because they just like the feel-good story and the marketing that correlates with this opportunity. It's not just about profit at the end of the day. They're surely going to make that. This is really having buy-in from the community to be okay with projects that get developed there. So that's kind of a synopsis of the law that we're trying to work with here, trying to pass here, and a project that we're trying to get tokenized before the end of hopefully Q3 of this coming year. So that's all I have to share. If there's any questions, happy to answer it. If you want to just go to the panel, also happy to do that as well.
Fantastic. Well, thank you so much, Ari, for this overview. I think that it's great to have a clear understanding of what's available and what's not in certain jurisdictions. There's some that obviously are always on the radar in the news, but some that are a little hidden, and yet they have some level of guidance or lack thereof. That being said, we do have a question from Henry in the chat. Can legal arbitrage work for jurisdictions like Turks and Caicos, say tokenize the assets in Delaware?
Not for real estate. So if you're only a Turks and Caicos Islands corporation can own real estate in the Turks and Caicos. So a Delaware corp can hold all of the shares in the TCI corporation. And this is not legal advice. Please don't take it as legal advice. But fundamentally, that can happen, but there can be no direct ownership. So the challenges that you would face with your own regulatory body would still exist. With all things US, most people in this world try to avoid it, or at least avoid US participants from being part for obvious reasons. So hopefully that answered the question.
Got it. Good to know. I'm sure some people can get creative with that, but as you mentioned, none of what was spoken of in this webinar is legal or financial advice for that matter. So just bear that in mind. Ari, one other question I guess would be, what do you feel the political risk is in these countries? Or do you think that, well, I'll leave it there and then we'll expand.
Yeah, so that's a good question. I mean, the Caribbean is a widespread region. Countries like Turks and Caicos, Bermuda, Cayman, Anguilla, which are Montserrat, are still have jurisdictional oversight by the United Kingdom. They are British overseas territory countries still subject to both British common law and then ultimate court of appeal up to the Privy Council of the UK. So political risk is generally seen as neutral, I think, in the Caribbean these days. There's not, well, I'm speaking mostly in possibly, countries excluding Cuba, maybe Haiti, for obvious reasons. But, in the most of the Caribbean, there's a very low political risk for business, and in fact, are very open to foreign direct investments and opportunities. Many people are taking advantage of it.
Fantastic. Well, thank you so much for this. Let's bring up the rest of the panelists onto, turn on your cameras and mics. Let's have a discussion here based on everything we covered today. We have about 12 minutes left in the allotted time for today's webinar, so I want to make sure we fit in some questions. That being said, audience, if you have any questions for the full panel, feel free to drop them in the chat here. I know that some of the panelists for the questions that we didn't get to have been answering them, typing, so look out for an answer to your question in the answered section of the Q&A chat. But with that, until some questions jump in from the audience, I did want to touch on something that, sustainability essentially. How do you guys envision, tokenization projects effectively addressing concerns around environmental sustainability and energy consumption, especially as blockchain technology continues to evolve? No takers. All righty. We can jump into a different question then. No worries. Well, a lot of what we talked about today, of course, is concerning, regulatory bodies, as we kind of just touched on in Ari's session, as well as platforms and governments. So how do you guys envision collaboration between the tokenization platforms, governments, and regulatory bodies to create an enabling environment for innovation while maintaining the financial stability and consumer protection in these emerging markets, not just LATAM, but also abroad in the other side of the world?
Yeah, just jump in very quickly. It's easy for a place like Turks and Caicos to have that conversation because it's very direct, small, and access is widely available, maybe different than in a country like Mexico or other parts, like South Africa. But here, there's a curious position where they want to know how they can adopt new technology to modernize what they already have and are looking for opportunities to differentiate the products they're offering both domestically and to people who want to invest, because there's a lot of competitors out there. So I always say this both as a lawyer and as an entrepreneur. The regulator is somebody you should be working with all the time, because at the end of the day, they do dictate what you can and can't do. And the more trust that's built in the relationships, the more collegiality you'll find in having what you want to do, get the result you want, essentially.
I just want to add to the same question, and I can answer it from my side too. The regulation around digital assets is something which more in some of the countries we can clearly see which are being formed up very recently. In India itself, there is a special zone which has been looking at these kind of digital asset regulations very closely. We have exposure to the GCC region, which is the Middle East region, where, of course, Dubai is leading in terms of the digital assets regulations. But the collaboration between, the idea of bringing blockchain power to do tokenization is very much welcome amongst the regulator. The role of crypto is something which is very limited to be seen. Tokenizing existing assets in the market, I think regulators are pretty open. The important element is doing it in the most safest manner, respecting the law of the land, and also, safeguarding the investments which the retail investors are going to do from that country. So I think the fiduciary responsibility is to keep the investment safe. And I see that crypto's role may not be a very welcome story in most of the regulatory setups. But the power of blockchain and making it more as an enterprise use case is pretty open. The regulators are open to talk about it.
All righty, thank you both for that. Given that we just touched on this, I kind of want to dive a little deeper. In what ways can tokenization platforms, issuance platforms, essentially ensure security and transparency for the investors, especially in regions where regulatory frameworks may be less established? For example, in the US, it's kind of clear, how you do that, and certain criteria that needs to be met for a platform to do so. But in other countries and emerging markets, maybe not as clear. So any proactivity that the issuance platforms should be taking into consideration as they start rolling out new assets?
If you're doing a digital, so if you're doing one of those SPVs where the shares are going to be digitally noted, you have to make sure that that's permissible in your local regulation, because some laws do not allow digital registers. They have to be physical, documents which are actually registered. If your country's regulator requires shareholdings to be registered with the regulator, it makes it just as difficult. So you have to really understand the vehicles and how that translates into the digital realm. So what we did is we actually looked at our laws first, and then saw, for example, how we can utilize DigiShares to mimic what's required to make sure that we are legally compliant. So I think that's the first step. So we are allowed to have digital registers so long as we could produce that digital register to regulator upon demand.
I will add to that at the end, tokenization is only the mean to the end, but the end itself is to have access to invest in real estate. So for instance, all the regulations that are directly related to real estate has to be complied. And then you start using the blockchain as the digital part that will help you give access to more people. But the grounding is also in the current regulations. For instance, what are the guarantees? What are the contracts that you are signing? Where are those contracts jurisdictions from? Did you manage to do the whole due diligence of the real estate companies? Do you have all the processes too of AML and KYC? So there is a lot of things that have to be taken into account, and not only if there is a specific or not regulation for tokenization itself. I strongly recommend to keep the compliance of real estate as a business as a primary part as well.
Good to know. Good to know. Thank you for those thoughts. I think we have room for one more question. And, I think we all noticed that the common theme here is, tokenized real estate, at least for most of the conversation in today's webinar. But I wanted to dive a little deeper into, for example, other areas. So how can tokenization be leveraged to empower small and medium enterprises and entrepreneurs in these emerging markets? Not necessarily real estate, but still tokenization and blockchain in general.
Yeah, that's something I touched on, and in what I was talking about, right, is that this comes down to the tokenization of private equities, for an example. One of the biggest issues in emerging markets is that these small, medium enterprises or like startups and things like that, they don't necessarily have easy access to funding. And that's really what's crippling, a lot of like our economic growth, right? Is that we're not supporting the little guys in the economy. And I think tokenization really addresses that problem in such a unique way, right? The fact that you can tokenize, any kind of, equities within these small businesses and, put that out there to the world and tell your story to the world and, get the world to kind of, invest in your business to kind of, grow to, a global scale, I think is quite a powerful tool to kind of, really speed up the economic growth by just supporting the little guys, right? If our governments and our systems here don't necessarily support them in a way that they should be, right? And if something's lacking there, then obviously like the next best bet is to go to the public of your region. But with tokenization of that, I mean, you really kind of globally opening up globally, right? So yeah, I think that's my thoughts on that for now.
I would like to add to this question as an answer coming more from real estate. If you really look at the small mid-size assets, anything in a range of $7 to $10 million kind of asset size, they do not have a liquidity path for themselves. The transaction to exit that kind of asset size in a private market is very tough. You look at the larger size assets, there are REITs which are happy to pick up a larger size assets and take it to market to liquidate. So small mid-size assets have biggest challenge in the global economy right now to liquidate, and these private markets can be a great option for them to tokenize and exit from there. So principally, no asset manager will give attention to a $5 million asset or a $8 million asset. If you're a $100 million asset, everybody will jump and come and give you a service. So I think it is going to create an ecosystem of tokenization and asset management together to give confidence to the asset owners and the investors at one shot.
Great. All things to consider for sure. The idea that you have liquidity optionality, maybe the liquidity in trading, from person to person, maybe is not there yet. I think that's something that's pretty much common knowledge at this point, but we're always working towards it and trying to get it growing. But in the meantime, there's other things you can do for liquidity options, whether it's potentially at least saving a little bit on a liquidity discount, or even collateralized loans we've seen in real estate, collateralizing your equity tokens in real estate for a loan, and sometimes even at more favorable rates. So all things to consider. Emerging markets, of course, are coming up on tokenization and have a lot of benefits for these markets. So glad that we got to learn from all of you. I'd like to invite Adam back up from the DigiShares team. Any closing thoughts and anything that we should take into consideration?
I would just like to say that it's always a pleasure to hear a wide range of thoughts on the various different topics, and just hear everyone's opinions and their experiences through the various different jurisdictions. And as always, we're very grateful to have everyone on the panel.
Fantastic. Well, with that, Sachin, Gabriela, Lethu, Ari, Chaz, Nick, thank you all so much for sharing with our DigiShares audience today. And DigiShares, thank you for having me as well. It was really fun to moderate this panel and webinar.